In this video, I'm going to explain my framework for deciding how much of my retirement portfolio I would allocate to Bitcoin. I'm going to cover 5 topics in this video. The first is 3 approaches to investment allocation. The second is historical performance of these 3 approaches. The third is I'm going to explain where Bitcoin falls in the total scope of global investment classes. Then I'm going to share what some financial experts are saying is their recommended percentage allocation to Bitcoin. And finally, stick around to the end when I'm going to open up and share what percentage of my retirement portfolio I decided to allocate to Bitcoin. I'm Michael, and this is Betirement. I learned some harsh lessons about investing back in the early days of my career in the early 2000s. And that quote that really resonates with what I learned from those missteps early in my career is from Wayne Gretzky. He said, "I skate to where the puck is going to be, not where it has been." And this is true in investing. If you invest based on what has happened in the past, you're going to miss out on the gains. And I really missed out on some gains back with the internet boom in the early 2000s. There's really 3 approaches to allocating your retirement portfolio, and there's nothing wrong with any of these 3. Any one of them might be the best option for you. The first is to play it safe with a diversified portfolio. The second is to allocate your investments based on what has done best in the recent past. And the third is to concentrate your investments based on where you believe things are going in the future, or where the puck is going. I was a few years into my career when the internet began to totally reshape our economy. And looking back, I totally dropped the ball in recognizing what the future would look like and how companies like Google, Apple, and Amazon would reshape it. I was an early investor in these companies, but I didn't really recognize what I was holding. For example, in 2004, I bought Google stock as part of its initial public offering. And I was so proud of myself 3 days later when I sold it for a 20% gain. But if I had held on to it, I would be up 11,000%. I didn't see where the puck was going. I'm going to share an example of how things have changed since the early 2000s. Back in 2010, the top largest stocks by market cap were ExxonMobil, Microsoft, Walmart, and Berkshire Hathaway. Today, the top 5 stocks are Nvidia, Microsoft, Apple, Alphabet or Google, and Amazon. How things have changed. And really, thinking back to this time frame, as connected I was to what was going on with the internet, I should have recognized the potential that the bottom 4, at least, Microsoft, Apple, Alphabet, and Amazon would have in reshaping the economy. Frankly, Nvidia's explosive growth has really only happened over the last few years with the advent of artificial intelligence. Now let's expand on this example and consider what would be the returns of these 3 different allocation approaches. Let's assume that you began in January 2010 with a portfolio of $100,000. If you'd taken the safe approach and invested that $100,000 into the S&P, which is a broad diversified index of 500 companies, you would have $610,000. That's a great return. If you took the second approach and invested your $100,000 in the 4 largest stocks of 2010, which was ExxonMobil, Microsoft, Walmart, and Berkshire Hathaway, you would have $797,000. That's even better. But if you had seen where the puck is going and put your $100,000 into Apple, Amazon, Google, and Microsoft, you would have a whopping $2.4 million. I believe that Bitcoin represents where the puck is currently going, and that's largely because of its scarcity. There will only ever be 21 million Bitcoin, and that's at a time of extreme fiat currency debasement or money printing. And yet, Bitcoin only represents a small fraction of the total global investment assets. This is the best chart to help illustrate how small Bitcoin is in the scope of all global assets. It was created by analyst Jesse Myers, who goes by @Croetius_BTC on X. He created the chart in 2023 and recently updated it in May of 2025. This chart from May shows that Bitcoin's market cap is just $2 trillion. Bitcoin's market cap is the 21 million supply times its current price. One note is that as of today's date, that market cap has grown to about $2.6 trillion. Bitcoin's market cap compares to that of gold, which is about 10 times bigger, or equities or stocks, which is about 60 times larger, or the bond market, which is 150 times the size of Bitcoin. To me, this chart illustrates how early we are in Bitcoin's adoption. In comparison to gold, it's notable that in many ways, Bitcoin is a better store of value than gold is, and yet its market cap is only 10% that of gold. Investment bank JP Morgan Chase recently published research indicating that they also believe that Bitcoin is undervalued relative to gold. Bitcoin isn't just a stock, it's a whole new asset class. Even BlackRock's Larry Fink recently acknowledged this. He said, "We're seeing Bitcoin become a real asset class." And despite this, there are currently 4 companies that are each valued at greater than the market cap of Bitcoin. Those are Nvidia, Microsoft, Apple, and Alphabet or Google. As I highlighted in my recent video about the strategy preferred stocks, Bitcoin is now becoming the foundation for bond-like yield-generating instruments. In the bond market, it's 150 times the size of Bitcoin. And there's even proposals for the U.S. government to issue BIT bonds, which are government bonds that are partially backed by Bitcoin. Now let's look at what portfolio allocations some experts in the financial industry are recommending for Bitcoin. In May, Ray Dalio, founder of hedge fund Bridgewater Associates, said, "If you are optimizing your portfolio for best risk-to-return ratio, you would have about 15% of your money in gold or Bitcoin." As recently as 2023, Dalio recommended just a 2 to 3% allocation. On October 1st, Morgan Stanley's Global Investment Committee, which provides guidance to over 16,000 financial advisors, recommended that growth-oriented investors allocate between 2 and 4% to Bitcoin. While this is a good start, I believe that 2 to 4% is far too low for most people who are planning for their retirement. You might be thinking, but isn't it risky to allocate a high percentage of a portfolio to one investment? And yes, it can be, but over time, some of the most successful investors have highlighted that thoughtful concentration of investments is a pathway to wealth generation. Way back in 1889, Andrew Carnegie said, "The way to become rich is to put all your eggs in one basket and then watch that basket." And Warren Buffett said, "Diversification may preserve wealth, but concentration builds wealth." And he also said, "Wide diversification is only required when investors do not understand what they are doing." Now, I'll share my decision for Bitcoin allocation within my retirement portfolio. I made this decision in July of 2020 when Bitcoin was around $10,000. I decided to take 25% of my retirement portfolio and move it into Bitcoin-related instruments. At the time, GBTC, or Grayscale Bitcoin Trust, was about the only option, but soon later, MicroStrategy and the mining stocks became good options for me. This decision took guts at the time, but I believe I had learned my hard lessons from the early 2000s and the missteps I made with the internet stocks. And I also believe that I could see where the puck was going. And so far, I was right. My retirement portfolio is multiples larger than it would have been if I had remained in diversified stocks. And this decision enabled my early retirement at age 51 this year. Each of us needs to make our own decisions based on our own understanding and our own conviction. I started this channel to share my experiences and to encourage others along this journey. If you appreciated this video, please like and subscribe to the channel. And if there's anything I missed, please comment below. If you'd like this video, you might want to check out these.